day, Ira Epstein of Linn Associates with your financial market update. And this update is for Tuesday. And this is the 26th of March, 2019. My mind's going in other spots because I was just putting together my newsletter showing the curve inversion yield, what happens with recessions once that yield comes out. And not only did I do the 3-month versus the 10, but if you get my market letter, you're going to see the 2-year versus the 10. And you take a look yourself and you see that this is a pretty good indicator. There's a lag to it, but you got to be a bit concerned. Now in the stock market today, I realized the markets were up, but for those people that were looking at my morning subscriber video, you know, in the morning we were showing that the market, especially in the NASDAQ, looked like one of those markets that was going to be under attack when the market got over the 7,400 level. And as it turns out, it was a great part of the day. Yes, it got to 74.4750 for about 5 seconds, and then the market started making the lower lows throughout most of the trading session there. Now the question is, where are we? And I think what the best thing we can do is go to the markets and take a look at it. And by the way, the API numbers came out with what the estimates from the EIA in the morning look similar, maybe a 4 or 5 million net draw on everything. As you look here, you can see that you're back up into this area, and on a closing basis, we've been here, and this is something of a resistance zone. Is it a sell zone, an out-and-out sell zone? No, that's not what we're talking about, nor do I put out here buy and sell numbers for you in terms of recommendations. Never going to do it, not doing it now. What we just do here is analyze where the market's at. And at this point, you've got an up thrust going. You've come from 24,875, and each break low on a closing basis is higher than a previous with the higher highs. As we come to the June mini S&P, you can see how all of a sudden you've gone into this trading band, really defined as the high about 4 days ago down to yesterday's low. In that band, what you don't want to see if you're bullish is taking out this 27.8950, yesterday's low. What that would do is clean this mess up, as I call it right here, and give you lower highs and lower lows. Therefore, if you're bullish, you don't want to see that happen. That's one way to look at it. If you look at where the market's fighting for 3 days in a row, you hear me say this if you're a viewer, the line in the sand is the 18-day average of closes. What you'll find is if you look at this number and you put on Bollinger Bands, it is not uncommon if a market hits an upper Bollinger Band for it retrace to that 18-day average and sometimes fight the battle. Is it every time? No. You got up here, if you come back, and you can see that the market, after hitting the Bollinger Band, it went up, but at least stalled at that number. It just didn't slice through, and even the next opening was right around that low. If you take a look, the 27.8550 was the low of this day, and the 18-day average is right there. Then it moved higher, and then the market has since then come back and fighting this battle that we're in right now. In terms of momentum, I have divergence. I have momentum pointing down, I've got the bias pointing up, and I don't have a trend on the swing line. So I've got divergence all over the place. In the NASDAQ, the market's got a higher high, lower low. Again, momentum is pointing down. The bias is up, but something more important happened in this chart. You had what's called an embedded reading. When you get an embedded reading and you lose it, and losing it requires the red line to close back under 80. And when it closes under 80, the very next day it's got to not get back over that again. And it did it. So now what we have is momentum, as I define it from the swing line, saying price in the 18-day average should make a run at each other. Does it have to? Obviously not. I certainly, the last I looked at my feet, I don't walk on water, and this isn't a market call. What this is telling you what I think momentum and price are trying to do. No more than that. I'm wrong if prices get over 75.4475, the most recent high. Heck of a risk, but that's what I'm seeing on the chart. In the Dow, You've got a lower low, higher high. There's a common theme here. We've stepped out of trends. Here we're going sideways. If this market were to break under 337, which is the lower band, would it have enough power to carry through to the 100-day average is one question. Number two, momentum is flattening out from where you hit yesterday, that band. You went back again to what number? Let me take you there. Here's the lower Bollinger Band. Now you went back to that 18-day average to have the battleground. That's what the market seems to be in right now. In the Russell, this is a more defined downtrend that had been oversold. Notice the word I used, had, past tense. Had been oversold, it's no longer there. So the first market I think the bears are going to look at out of all this could be the NASDAQ because it lost momentum, and another runner-up might be the Russell. In the Russell, should the market take out this high, 1575.70. You can see that right up over my shoulder. Then you break this bearish pattern. Now, has the market reached downside targets? Without question. It hit the lower band, it hit the 100-day average, and it's bounced away. If it hits the 18-day average, the way that I teach charting, what happens is you got to think of a pinball machine. If you get back to the 18-day average, these numbers that have been hit light up again as potential support. Because they've been hit already, they don't have the same amount of support if you don't hit the 18-day average. Doesn't mean they're not important, but the way that I teach the charting, they lose a certain amount of that support. You might want to go on our website at www.iraepstein.com and go under education, take a look at the charting course. It might help you out. In the VIX cash, remember what I said. First challenge of an upper Bollinger Band or a lower band. I think the pros in the lower band are writing puts on the upper band, and they're trying to come out at the 18-day average, by the way. That's my theory. I cannot prove it works. I'm not trying to lead you to that. But if you go on your chart and take a look at it, you come up with your own conclusion. Here's your challenge of the 18-day average. Now, the flip-flop's true should it get up to the top band, which it did. Even got over it there. The question is, will it come back down? And now if it hits the 18-day average, I think the pros come out. They might have even come out here. I mean, 1647 isn't too far away from 1449. And remember, they were writing this about $1.50 higher. So not bad if you think about it. But that's what I see in this. Where's more risk? I think more risk is in writing the call, because at a $12 VIX, to get the same move from 16 to 20 is not too difficult. Really, it isn't. But to go from 12 to 8 is pretty hard. That's all I'm saying. Go back on your charts, do your work. In the T-bond, this is called riding the Bollinger Band. And it's riding it when, especially, you have an embedded reading. So until the red line closes under 80, my theory is that on breaks, you're going to see the pros support this market in a strong manner. In the 10-year note, embedded reading, riding the Bollinger Band. If you'll notice, you had a day up and over the band, another day over the band, right through here. Each consecutive day over the band, I take away one of the theories, and that's what the algorithm's built on, that 95% of the time the market will trade within the bands. So that gives me, coming into today, a 3% chance that the market will stay over the band. The market got back under the band, as you can clearly see there. On the close today, it finished right on it. On it is not over it. So I consider now you're back to 0 in the count against the 5%. But this is what reigns the day for me, that embedded reading. In TLT, as long as you keep the embedded reading, what I'm going to say is that on breaks, I expect the pros to buy it. But I think if you lose that reading, even intraday, you scare a lot of the pros off. Remember that. So think of it that way. This is a measurement way to think about what the pros are doing. In the dollar index, believe it or not, this market changed course again today. Now you've got it with higher lows and a higher high. And what swing lines try to do, and I hate this particular formation when it comes down like this. On a scale of 1, how much credence do I put when you get these higher lows, higher highs with this? From my normal let's assume that I feel comfortable in 8 out of 10, I go down to 3 to 5. That doesn't mean it's not with an upside bias, which it is. Doesn't mean the swing line's not up, it is. And because you got over 96.29, even if you broke through 95.89, you'd end up with a higher high and lower low. So I think today the bulls grabbed control of this market back. They're probably going to try to defend it around that 18-day average of closes. At the same time, what masks that is the fact that lower highs, now lower lows in the euro currency. So suddenly this has turned bearish. Now, for you to knock out the bear part of this market, you've got to get back over 114.12. Got that? I think the pros will try to defend the position should they get a rally back to the 18-day average. Momentum is down, bias down, trend down. In the British pound, another outside day up. Now, it's going to be an important week. Is Miss May going to announce possibly she's going to step down? Is she going to fight? And she's won her battles. And the question is, what now out of the parliament? And it's pretty wild what's going on. Another series of battles now. Higher low, higher high, back in an uptrend. The warning sign would be taking out today's lows. So I would expect that if you didn't have the name on the chart and you knew nothing about Brexit, that the pros will try to support the market into the 18-day average, but get under that low, and the odds then favor that price may be in the lower Bollinger Band will try to make a run at each other. In the Japanese yen, we were up yesterday like this. Now, on the way back down, the 100-day average, in theory at least, to me, my theories, should be the first support level, second support level, the 18-day average. However, this market's really overbought. So I might have even said yesterday, will the pros really step in? I didn't expect that they would that way. But now that you got a 68 reading, you're not overbought anymore. So somewhere between here and the 18-day average, I won't be surprised to see the pros buying the market. By the way, let me come back to that. But the stop would have to be under 90.13.5 on the current formation. In Bitcoin, we got up to the upper Bollinger Band, couldn't quite make the run to the 100-day, and all of a sudden momentum starts waning. Watch this. Lose all your readings, you go right back to the 18-day average, and that's where the market's fighting its battle. It's out of a trend. It's got a higher high and lower low. That market, I show it because some of you have asked for it, not a lot of volume in it. In the Brent, and I'm moving now to June contracts, June versus June. I've moved away from the May because I think the 29th is the last day of trading in the May Brent. And as you can see, that spread's narrowing in, which means American WTI crude is gaining on OPEC. Think of it that way. And as we look at the Brent, you can see how the market's got a lower low, higher high. You tell me this market isn't just stuck right there. It is overbought at the same time. There is no signal that I can see. That doesn't mean that you don't have one. I just don't. In WTI crude, I've got the same dilemma. I have a lower low, a higher high, but while the market lost its embedded reading yesterday, notice how you had a 78 there, in the days before both numbers were over 80. The only time it can recoup the embedded reading is the very day afterwards, and it has to do it fairly fast. And it did it. I mean, wow. You opened higher and you stayed higher. So that's what ended up doing it. So you always pay attention to that. In the rebob, there's been no back off since I put out that gasoline report for you a couple of weeks ago now. And as you can see, you've had one test of the 18-day average and you've managed to just stay up. Does it not go hand in hand with that embedded reading? It certainly does. This is called riding the Bollinger Band. I won't be surprised to hit that number tomorrow and see if it backs off a little bit from that. And by the way, you do realize this is a market that in December was way down over here into the 145 area in this contract, and now you're up from there 50 cents already a gallon. But that's what happens as the market starts anticipating often spring, summer driving. Finally, we get to the nat gas, and the market is holding the Bollinger Band 100-day average, but that's all you can say about it. It's got a higher high, lower low, respecting the Bollinger Band, and now it's oversold. You know, what I try to do each morning is get you started with my subscriber video. Now, let me explain why. In these videos, I cannot say, like I did today in my subscriber video, do this, exactly do this, here's where you're wrong, here's what I'm looking for. I showed pivot points this morning. I was giving ideas on different trade ideas through there, and I cover 40 charts. Now, the beauty is you can put your cursor right on the bottom of the video and pull it along to the areas you want, because I do them in this exact sequence all the time. And yes, I cover a number of ETFs in that arena. Then I'm going to talk chart traders. I'm going to give you an idea what I think the pros are going to be doing. I'll show you the points that I can find that they'll be doing. You know, just giving you my experience level. Do I actually know they're doing that? No, but if you take a look at these averages like we're looking and you see where this market comes and goes, you get an idea where they're at. What about technical and fundamentals? If there's something really fundamentally important, I'm going to mention it to you. Most of the time it's going to be technicals, and I'm going to load you up that morning with trade ideas. I'm even considering now on Sunday night maybe getting another one of these going for your week, and maybe during the week another one. In the evening, I'll call it my morning subscriber video, but I don't mind doing these, and the way I'm now doing reports and all, I can do them on my videos, and they seem to be helping traders. And that's what this is about. Do I make a few bucks on it? Yeah. 26 cents a day to get you started for the first 30 days. And after that, if you want a one-year subscription, it's $156. You can go month to month, and there's no contract with me. How do you take a look at it? Well, you can go to our website under www.iraepstein.com. Go under research or education. You'll see my morning subscriber video. All the information is there. If you want to sign up, I'd appreciate it. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.